Hello, friends. My name is Mike. This channel is Health and Wealth. I got a cold. You know what a cold feels like, and that's what I got. Happy Sunday to you all. Today we're talking about the stock market. We're talking about stocks and the market and last week and how it did. So I had a week off YouTube, forced week off. Actually, that light bulb is still burnt out from our power outage, but we are back, baby. Power's back to most of the area that I live in. Over 1 million homes were without power. And I got mine back a couple of nights ago, which is good, but feeling good. So if you guys are here, you're probably here because A, you got loyalty to the channel. I really appreciate you. Thank you so much for being here. Or B, you just want to hear about this Black Monday business. So I've taken a look. I've opened up all of the charts and the stocks and ETFs that I'm invested in. I've also taken a look at the S&P 500, the QQQ, and I've got a clip at the very end of Jim Cramer, just like a 30-second clip talking about Black Monday and something to be cautious of. Okay, so first things first, I got the S&P 500 here. And so you could see it had a massive, massive dip there on April 2nd, which is 4 days ago. But I've found something kind of interesting, near or at all-time highs February 19th. So from February 19th to this past Friday, it's down 17%. That's an insane drop for the S&P 500. Let's remember 17% for a little bit later. QQQ here. Let's go on the 6-month chart with this. February 19th again. So right now it's down 12% over the last 6 months, but since February 19th, it's down 21%. That's a massive drop for the QQQs. So me, I'm invested in a lot of yield max funds. That's why you're here, most likely as well. And I think a lot of people are feeling the pressure of the stock market coming down. A lot of us are new to crashes and corrections. A lot of us are new to investing. And so there's a lot of fear and uncertainty in the market. Now, the reason I showed these two first is because these are kind of your measuring sticks for the stock market, right? These are, old, steady. They generally just go up. If we go back to S&P 500, we go over the 5-year, take a look at that graph, right? They generally always go up. But you could see in there has been times over the last 5 years where it did dip. If we max this thing all the way out, and it goes all the way back to 1997, you could see some big dips in there as well. So are we going through one of those big dips right now? We might be. Again, the reason I'm showing these charts is because I want you to think about these charts when it comes to the ETFs that I'm sharing with you, which is Nvidia, CONY, and MSTY. So let's go to Nvidia first. Over the last 6 months, down 45%. That's pretty huge, right? That is huge. Nvidia, at the same time, down 26%. And if we go to that date, February 19th to today, it's down 32% in that time. Same kind of deal as the S&P 500. Let's go back to the S&P 500. Let's go back to February 19th just to be sure our numbers are accurate here. Down 17%. So it's double what the S&P 500, the Nvidia. Coinbase. Let's go over the last 6 months with Coinbase down just 4.96%. That's not too bad for Coinbase. Over the last month, though, down 25%. Yikes. But let's go back to February 19th. Where is it here? Right there. So February 19th to today, down 37%. That's rough. That's for sure. CONY, right here. CONY in the last month, down 27%, down 47% in the last 6 months. This February 19th to today, down 42%. That is not good at all. People say, should I invest in CONY? You do your own judgment on that one. Personally, I wouldn't put any new money into CONY until the stock market comes up, but we'll talk about that coming up here. Next one that I have is MSTY, but its underlining is MicroStrategy. This is a Bitcoin play. Look at the last 6 months of 57%. Pretty darn good. February 19th, though. What happened? Well, since February 19th, it's just down 7.86%. This is a Bitcoin play. Doesn't rely on traditional stock market funding, that type of thing, right? So MSTY itself in the last 6 months down 24%. Now, this is because we did have some massive highs here. It was at $27 6 months ago, but let's go February 19th, just like all of the rest of them here, if we could find it. Am I going crazy? Is it not going to February? Oh, yeah, I am going crazy. Man cold. Excuse me. I'm not editing this video. Man cold. So February 19th to right now, I shouldn't say just, but 15% it's down. That's quite a bit, actually, right? Down 15%. However, if you take the last 5 days when the S&P 500 was tanking, this went up a little bit, right? Bitcoin play, MSTY. This week, MSTY is going to be paying out. Bitcoin itself here over the last month, down 10%. If you look over the last 6 months, up 33%. But let's do February 19th to today, down 13%. Now, for Bitcoin, I'm going to just kind of relay what I like to say here. For Bitcoin, I like to buy, just $100 every pay I put in there. I've been doing it for about 4 months now, maybe a little bit less than that. And I've been saying that if this thing gets to 75,000, that I'm going to double what I have in there. So I'm waiting. I'm hoping this thing goes to 75,000 because I would like to double it. And because I really do believe in Bitcoin long term, I think it's going to be my bank account. I think that's where, 10 years from now, that bank account will grow, grow, grow. That's the hopes and the dreams. Now, why did I go over all of this? Well, a lot of people are wondering when is the best time to buy whenever things are crashing. And so I can't talk to you about when's the best time for you to buy, but I can talk to myself. And so I'm going to go back to Nvidia here. I started buying Nvidia about a month ago. I think my average price, or my first purchase price was $132. Yeah, way back where it would be right around there, $132. I bought 10 shares. So last week on Friday, I bought 6.25 more shares of it, bringing my average cost way down. And then I've been saying out loud that I'm going to buy more if it gets to 90. So I want to double my position. So currently I have 16.25 shares. So I'm going to double that up to 32.5 shares if it gets to 90. Now, somebody had mentioned, if this thing gets to 90, and you buy at 90, you're creating generational wealth. And then somebody said if this thing gets to 75, you're creating multi-generational wealth. So I don't know if that's true or not, but I really do believe in Nvidia. I think they're a company here to stay. They're good. Everything about them, good, good, good. And that's why I'm buying Nvidia. Um, yeah, that's why I'm buying Nvidia. But I'm not suggesting that for you at all. I just think it's a good company for me and my long-term prospects of purchasing shares. I also have the S&P 500 sitting here. This is a map of every single year on the S&P 500 when it went up, when it went down. So out of 100 years, it had 26 down years. So the blue is a year. Every spike is a year. Every blue is a positive year on the S&P 500. Every red is a down year on the S&P 500. I found this really simply. I just typed into Google S&P 500 yearly charts, and then there's a bunch of them out there. They all kind of look the same, but I want to go to recent downturns. So 2008 minus 37%. That was a huge year. And then 2018, just minus 4.38%. 2022 is very recent, 18%. And then so far this year, minus 13%, which is pretty terrible. So I've actually Googled why all of this happened. I'm going to bring it up here. So I've got the last four big crashes sitting here in front of us. And I just Googled why did they crash. So the 1973-1974 stock market crash, a significant bear market, was triggered by a combination of factors, including the 1973 oil crisis, the collapse of the Bretton Woods system, and the aftermath of the Vietnam War, all of which contributed to inflation and economic instability. Now, I really think the last couple of words are important for this one: economic instability. Next one was 2008. Now, this wasn't just the next one. This was like the next big one, is what I'm talking about here, right? So in 2008, markets crashed. A pivotal event known as the Great Recession stemmed from a confluence of factors, primarily the bursting of the U.S. Housing bubble, fueled by risky mortgage lending practices and an inadequate regulation. So, The Big Short was a big movie for this one here. That was a big one. Lessons were learned, so we think. Next one, September 11th. So this is the 2002 September 11th attacks accelerated the stock market drop. Investor confidence was further eroded by several accounting scandals and resulting bankruptcy, including the Enron scandal in October of 2001, the WorldCom scandal June 2002, and the Adelphia Communications Corporation scandal in July 2002. Huge year, right? Huge year, a lot of scares, more war talk, things like that. Enron, I think just about everybody remembers that one. The latest one, 2022. I don't know if this was necessarily a crash or more of a Nike swoosh, but the decline was due to the highest inflation readings as part of the 2021 to 2023 inflation surge and the resulting increases in the interest rates. Combined with fears of global recession due to the decline in economic indicators and an inverted yield curve exacerbated by supply chain disruptions due to the 2022 Russian, I think that's going to say invasion of Ukraine. So, war, right? So, war. What else? Economic uncertainties, things like that. So, what's happening right now is that Trump is talking tariffs. So all of these countries out there, economic uncertainties are happening. And we talk about, two really bad days this past week, Thursday and Friday. And then there is the thoughts that maybe Monday might be something called Black Monday. So for me, I don't have any extra cash hanging around. I can find extra cash if I need to, but I'm certainly not buying on Monday. I told you I wanted to buy more Nvidia. I think I'm going to wait a little bit until this market kind of calms down. I'm not in a rush to buy it, but I would like to buy it at a rate that's reasonable for me. So I've set a couple targets. 90 and 75 are my two targets, but I don't know if it would make sense on Monday, as an example, to jump in and throw my money in, because the market has just hit all time. I mean, it's going down lower and lower multiple days in a row. So if Black Monday is a real thing, then I certainly don't want to be buying on a red day with the falling knife. I don't want to try and catch that, right? So take a look at this 30-second clip by Jim Cramer talking about that, just to kind of put it into perspective for you here. Here we go.
Welcome to Bad Money. Welcome to Cramerica. Other people make friends. I'm just trying to save you some money. My job is to put a day like today into context, because it's a bad one. So call me, 1-800-743-CBC. Tweet me, Jim Cramer. The implosion of our markets continues. And it's so obvious that this is a man-made obliteration. It's probably not over. Today's action, Dow plunged 2,231 points. S&P plummeted 2.97%. Nasdaq only nosedived 5.82%. Remind you that we're in one of three modalities, okay? We could be in for the grips of a quick bear market, a la the COVID 220 model. We could be in for a 2000-style bear market, where tech was laid to waste for a very long time. Or it might be the big kahuna. That's the one of October of 1987, where the market went down hard for 3 days, Wednesday, Thursday, Friday, and then it went even harder on a day we call Black Monday, where the market fell 22%. The president doesn't try to reach out and reward these countries and companies that play by the rules in the 1987 scenario, the one where we went down 3 days and then down 22% on Monday, has the most cogency. We will not have to wait out too long, will we? We'll know by Monday. Fortunately, we had an excellent set of employment numbers today. At least it makes it less likely a crash will necessarily lead to a recession. But if President Trump stays intransigent and does nothing to ameliorate the damage that I saw these last 2 days, I'm not going to be constructive here. I will contain my anger, but only because I lived through 87, and in the end, I came out okay. I was in cash for the crash. I know what this feels like. Oh, and if Europe moves against our fabulous tech companies next week, then I will be furious. That I promise you, because it should not happen. None of this has to happen.
I totally agree. Man-made event happening right now. It's a man-made event. And I just want to end it like this, you guys. I don't know what's more important to you, but you know, is a live golf tournament more important than fallen soldiers? My name is Mike. This channel is Health and Wealth. I hope you have a great day.